Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of CBOE's Options Institute, and it's Monday, August 9th. Now, last week, the broad-based U.S. equity markets gained about 1% across the board. Looking at realized volatility for the S&P 500 index, the 10-day measure fell to 7.5%, which is back at the low end of the range. 30-day historical vol for the same index is closer to 10.5%. The VIX index closed at just over 16 last week, which is also at the low end of its range. In early July, the VIX index closed as low as 15.07. Today, the S&P 500 is down about 10 handles as of recording, and the VIX index is slightly higher and measuring 17.25. Now let's take a look at some VIX options trading. It appears like the August 18 puts are being spread against the September 19 puts. That's on the tape about 5,000 times. The September puts are trading 88 cents over the August in that spread. There's also an August 22-25 call spread that traded for a plain quarter. Now, the August futures are currently trading just below 19, and they will expire on the 18th of the month. Shifting to more macro data, earnings will start to slow this week. About 80% of the S&P 500 constituents have already reported. Arguably, the biggest economic data point will come Wednesday when we get the latest look at CPI data. Inflation has been a buzzword for months and will likely continue to be until the reports come in less hot or perhaps the Fed chooses to act or signal their intent to act. The employment picture also factors into the Fed's rate calculus, and Friday's numbers were quite strong. We saw the unemployment rate come back down to 5.4%. So as usual, there's plenty to keep our eyes on this week. That's Volatility 411 for Monday. Thank you very much for tuning in.